Welcome to this quick review tutorial on the LifeGuide Special Risk Product module. The number of special risk products being offered on the market has increased significantly over recent years, as has the variety and number of permutations of these products. The Special Risk Products module of LifeGuide is designed to provide users of LifeGuide with the needed facilities, capabilities, and functions to serve the best interest of the client and within the context of the client's individual needs and circumstances, and also to easily identify and examine available offerings that would be best suited for the client in each individual case. This tutorial aims to present an overview of LifeGuide Special Risk Products module, and it's used to examine the market to identify and focus on products that may suit the best interest of the client and to examine each in detail. For this tutorial, we will use a hypothetical example of a 55-year-old male, non-smoker, who likely would only qualify for simplified issue or guaranteed issue products, but needs $100,000 worth of life insurance coverage, as would have been determined through a detailed financial risk transfer needs analysis. So let's put in $100,000 here, and let's run the survey. Quote: single life, single insured. LifeGuide's special risk module, including simplified issue, guaranteed issue, and guaranteed issue products, is automatically invoked and presented, as you can see here, employing LifeGuide's across-the-board functions, and therefore with all the possibilities, companies, and products included in the survey. So, as we can see as we scroll down here. So let's take a closer look, starting at the top of the LifeGuide Special Risk module. So we see that here we've quoted for $100,000 worth of face amount. And this can be seen at the top. It can be seen in this field here. At the top left of the screen, we see the demographic information that was used to generate the survey. Again, to its right is the face amount that was quoted. And then further to the right, we are able to put in some alternatives. So let's say, just for a quick illustration, let's say that we want to look at the alternative of $75,000 and also at the alternative of $50,000 for face amount. By checking off these toggle boxes here, we now are searching for the various face amounts, starting off with the $50,000 alternative, and then we scroll down, and as you can see, it groups the products by type. As we go down here, and now the face amount at $75,000, it repeats on that, to be followed later on as we scroll down with the $100,000 amount. We can turn these off if we wish and return back to where we were to start with. We're now quoting only on $100,000 as we've turned the alternates off. We can turn on either one or both of the alternates. The central area of the screen lists the products in the survey in 4 main columns, starting with the name of the insurance company or the issuer of the plan, and then the name of the product, the modal premium, In this case, it's annual, and the brief descriptor of the type of policy. So in this case, it's a term 10, and here it's a term 20, and so forth. One of the questions you may ask is, can we separate these? And we will get to that shortly. To the right of the central area of the screen, the selection menu is for the product types. So that addresses that question that I just raised. So in this case, we're quoting all product types. However, let's see the other way. We turn it all of them off. Now, obviously, we have nothing here. So if we want to only look at, say, 10-year term, we'll check that off. Now all the products are 10-year term. If we want to include also 20-year term, now we have the 20-year term. If we want to include whole life pay, there we go. Now we also see the whole life guaranteed life pay. And of course, if we want to turn on all product types, then just check this off, and all product types are quoted. Now, because special risk is quite a unique set of products, and because we also include products that are sold direct, for example, from such issuers as CIBC, for example, or here is another one somewhere. There should be CAA. There it is. CAA, CIBC, by the way, they're alphabetically ordered here. So if we don't want to see or don't want to include CAA, for example, we'll just click on it to turn it off, and it's out of the game. And likewise, let's say CIBC. Okay, let's turn them back on in order to have a more comprehensive survey of all of them. Okay. Now, looking further down, we see here on the left side we have the various premium payment modes that are available, and all 4 are available, including annual, semi-annual, quarterly, and monthly. So we can alternate amongst them as we wish. As you can see now, the premiums are all shown monthly. Going back to annual, now they're all annual. And likewise, we can go to quarterly. Now, I went to quarterly intentionally here. Some of the products are not available on quarterly, so in order to keep them in the comparison, what we've done is we noted that they're available monthly, and the quarterly figure here that's being shown is essentially the equivalent of 3 monthly premiums. So theoretically, the client could be paying monthly into a special account that he would set up at a bank, and then quarterly pay out of that the quarterly total that amounts. Okay, or in the reverse, rather, putting each quarter, he would put in the amount of that would be equivalent to 3 months worth of premiums, and the insurance company would draw from that. So essentially, what it is to indicate that the quarterly is shown as the aggregate of 3 months, which constitutes a quarter. Likewise, when a product is not available on a semi-annually, we also mark it that way in order to be able to include it in the survey, rather than simply say ignore it altogether because the premium payment mode is not available. Now, going on to the next box here, we have the ability to select simplified issue, guaranteed issue, and also to include or exclude products that are sold direct. So if we want to see only the simplified issue products, we'll check this to turn it off. In other words, what we've done here is we've excluded the guaranteed issue products and included only the simplified issue, and we left in the sold direct. If we want to exclude the sold direct, products, in other words, those products that are sold direct without an advisor involvement. We will check this, and now all the products that are shown are sold by or sold through advisors, and all of them are simplified issue. Let's change back to annual because that's the most efficient premium payment mode. Okay, now we'll turn them all back on. Now, the next area here deals with the death benefit, whether it's graded, level, or indexed. So the same way as we could include or exclude simplified issue, guaranteed issue, and so forth by turning on or off, we can do the same thing here. So if we want to see only the graded benefit products, we will turn this one, which is level benefit, and this one, which is index benefit, off, and these products are all graded benefit. If we want to see only level benefit, we'll turn that on, the level benefit, turn off the graded benefit, and there we are. Okay. Now, using the top area here comes in very useful, especially in situations where the premium might be beyond what the client may be able to come up with. You know, let's say, for example, we want coverage for life here, so we'll turn off all the products when we'll go guaranteed T100, guaranteed T100 20 pay, unique T100, guaranteed life pay whole life, these two are whole life, and quick pay whole life and adjustable life pay whole life. So we've taken the permanent products, so to say. Okay, now we're seeing a fairly high amount of premium payable for $100,000. So we want to take a look at, say, $75,000 or $50,000, and we go back as we did earlier, and here is what the premiums would be. Okay, let's turn these off again and go back to our 100,000 with all the products included. Now, any product that we highlight, and I'm doing this randomly here, as you can see, the values are automatically shown in the bottom area here, in this section here. Okay, so here we can see it going through year by year, and you can scroll down policy year by policy year, showing the age of the insured, the coverage, which means death benefit, the cash values, and of course the annual premiums payable. And I've just taken this randomly. In case it's a term policy, for example, here it's a T10, obviously there are no cash values, so we're not showing those, but we are showing the death benefit and the annual premium on a year-by-year basis again. And we can break it down like that for full view, okay, for year-by-year, or if we turn the full view off, and then we just show when the premiums go up. So this is a 10-year term, it goes up in year 11, goes up again year 21 and year 25. Now, of course, if we want to put the products in order by product type, we just simply click on this button here, and now we have the products reordered in ascending premium order still, but by product type. Likewise, if we want to go by company, we can do that here. Okay, so the company name is on the left, the product, and then the premiums. We'll go back to the survey by ascending premium order or by rank, and we can hit on any product, and we can see the plan description by clicking on the plan description button. And this gives you a quick narrative on the product itself. Likewise, we can take a look at what the underwriting would be. And if we want to see the policy wording, we click on policy wording here. And the policy wording takes a little bit of time because it's a PDF, a larger PDF file, and it is then displayed. Obviously, this is a sample policy, and obviously the policy, when and if issued, governs. But it's a good idea to be familiar with the product, its general description as well as its wordings prior to selling the product. We'll close this off. Okay. Further information, for example, marketing information, is available by clicking on the little eye here. A company profile for the company is available by clicking on this button here. In this case, we're looking at a Forester's product. And of course, we can go directly to the company's website by clicking on this button. Okay, let's go back here to the survey by clicking on that button. Okay. And we can, of course, assign the product to the repository if we wish. And we can, at that point, go and analyze it by various means on a side-by-side basis. So here is an expanded survey by rank. And I'll close that. So again, when you're here, you just put in, at the main screen, you just put in the client information as you've always done. And you click on quote, single life, single insured. But instead of getting the regular screen of LifeGuide, which doesn't divide them in this way, this module had to be created because of the vast differences between the various special risk products. By the way, in terms of the output, for example, we highlight, let's go down actually, I want to show you something else. Here is a CI, because there are CIs that are available as simplified issue or even guaranteed issue. And we want to know what the covered conditions are in case of a CI. So when it's a CI, you have this button here that allows you to click and view which conditions are covered, conditions and events are covered in the product. Close that. Likewise, let's take a look at the whole life product here, and let's take a look at one of the aspects of across the board of LifeGuide, and we click on that. And here we can start making evaluations based on the time value of money as well. Okay. And we can look at it in greater extent on a spreadsheet basis, and we can look at it graphically. So There are various options that are available to you. Let's close this one here. I mentioned earlier that the output can be in various ways, and likewise here you can produce the output in the form of a PDF and actually go and see what it would look like before you actually produce the hard copy or PDF output. So if I want to view it first, I'll just click on OK here, and here is the display. Obviously I'm using our test copy, but you have the same thing on your LifeGuide. Each quote, of course, is dated. This one is done on September 21st, 2015, and time now is about 1:10 in the afternoon. Okay, we'll close this, and you can experiment by increasing the investment yield, the tax bracket, inflation rate, etc., and get various time value comparisons, not just raw dollar value comparisons. Close this. Okay. Now, I mentioned the quotation repository earlier. If you can assign this to the quotation repository, that's an area of LifeGuide that we covered in another tutorial. It's quite an interesting one because it allows you to also include products that no longer exist. Such as, for example, if a client comes to you with an old policy that's 20 or 30 years old, and perhaps neither the product is offered on the market anymore, nor even the company in existence. So I won't go into that at the moment. I wanted to touch on this tutorial vis-a-vis the special risk and the special risk products that include the guaranteed issue and simplified issue and specially designed products. Keep in mind that these products need to be looked at both qualitatively and quantitatively. In other words, comparing just by price or spreadsheeting just by price alone can be misleading. So I suggest strongly that when you look at a product, you do investigate the product's plan description, the underwriting requirements, whatever they are, the policy wording, and so forth. Also, if the policy wording is not available, then questions should be asked, because that's a very important area to look at least I believe so. In any regards, this concludes this tutorial. I want to make a note that this tutorial is made today, September 21st, 2005. The information that you're looking at is correct as of this date. However, as product offerings change quite rapidly, the plans, figures, and details in this tutorial may differ, and may even differ substantially from the actual as time passes by. The purpose of this tutorial is to show you the module, the product, pricing, the qualitative aspects, and so on change, and they change quite rapidly. So it's a good idea to examine this whenever you're looking at offering the client a special risk product. And I thank you very much for investing the time to view this quick tutorial. Please don't hesitate to call us. If you have any questions or any suggestions, they're always welcome. Thanks again.